It's all a game if you're willing to play. So of course, the price of Bitcoin goes up accordingly. It transfers that wealth from those that sold, the rallying before the halving. Even if you hate the thought of cryptocurrency, it competes with the dollar. Bitcoin halving. Now that's a big deal if you're in the crypto game, if you are playing the casino. Is coupled this year in 2024 with, of course, the Bitcoin ETFs being approved, which has allowed tons and tons of institutional money, billions and billions of dollars in institutional money to, of course, help raise the value of Bitcoin. And in a big, big way, even if you hate the thought of cryptocurrency basically fighting the dollar, really doesn't matter anymore, because at this point it's been knighted, it's been elevated to the point of a legitimate thing. And you can't deny that. Or maybe it's the Trojan horse for CBDC that is totally coming, whether we like it or not. Nonetheless, it doesn't matter if we approve or disapprove, because those in power basically are going to push the hell out of this stuff. And if you want to play the game, well, as long as you don't get completely wiped out, you can totally make some money. But of course, you got to understand how this stuff works. So even if you think it's bull, guess what? Now, at this point in time, it is a legit way. It is a legit power play. So the two big things I'm going to talk about is Bitcoin hitting $1 million. All these crazy price predictions coming out, even taking Bitcoin as high as $300 million. I'll take a look at some price prediction models in a separate video, but for this bull run, if Bitcoin hits $1 million, which is pretty crazy, if it hits $1 million, it would actually not be that surprising. The main reason is, well, before it's done for 500x, last time it did 16x. Were the last sort of bull run after bottoming out during the whole C19 scenario. March of 2020, pushing all the way to April of 2021, it went from 4 to 64K. That's huge, 16x. Okay, so a couple of notes on the Bitcoin halving. Probably one of the most significant halvings of all time, of course, because it's absolutely coupled to the ETFs being approved, which in theory would serve as a massive catalyst, of course, to help it push even higher. So sometime in the middle of April between is the Bitcoin halving. So unlike fiat currency, where they just print and print and print money whenever they need it, basically the Bitcoin halving operates as a deflationary model. So those that run Bitcoin mining operations, their block reward will be halved. For example, here's a chart. So right now, those mining Bitcoin are rewarded 6.25 BTC, where after the halving, they will be rewarded 3.125 BTC. And on to 2028, they will be rewarded 1.56 BTC. So of course, those running the Bitcoin mining operations, well, they need to be financially, which of course increases the price of Bitcoin. So of course, the price of Bitcoin goes up accordingly. So this happens approximately every 210,000 blocks, roughly every 4 years, thereby of course providing a significant decrease to the supply of Bitcoin that is rewarded and basically gets pushed out into the market. And because there's a set number of how many Bitcoin can be mined, 21 million, therefore the whole process, the whole protocol, the whole blockchain, the whole essence of Bitcoin essentially is that it provides proof that this is the asset, the only asset in human history that would absolutely be limited in supply. Therefore, unlike our dollar, which has lost 99% of its value over just 120 years, well, this exactly is why whoever created Bitcoin. Of course, there's a lot of theories as to why, how, when, and maybe even the government formed Bitcoin itself. Who knows? So theoretically, the aspect of limiting the supply of Bitcoin cannot be changed. It's hardwired into the protocol. So one extremely important thing to understand is that the people running mining operations, the nodes, with the value increasing in the halving, this essentially provides a subsidy for the network. Extremely, extremely important. So what that does in turn is also provide a very, very good incentive for those running the network to basically keep it being deflationary, to not make it inflationary, because if they did, it would actually make them poor, which would make absolutely no sense. So a very logical system put in place. So there's that. So for example, miners currently given 6.25 BTC at say a price of $64,000 per Bitcoin, that awards them $400,000 $60,000. Stuff adds up. It adds up pretty quick. Some of you are probably thinking, well, why play in this game? It's rigged. Those same exact people that cause the $35 trillion in deficit in the United States, those very same people controlling the money printers, making themselves and their friends wealthy, they themselves rig the game against the common man. Therefore, nothing, absolutely nothing is fair. Okay, so 2024, you have the election, which is huge. This is going to be pretty crazy. You have Bitcoin ETF approval. You have increased regulatory clarity. Not just clarity, but also approval, essentially, because of the ETFs, where this approval basically says it's not going to get banned. The big boys, BlackRock, JP Morgan, and everyone else, they're allowed to play with it. Therefore, it won't get banned. That's a big deal. And of course, the massive adoption by huge corporations, huge international banks, and of course, countries. So 2024 is absolutely insane. It's absolutely insane. And when I make the video about price prediction models, you'll see that some of the stuff is just, it's ludicrous. It's absolutely ludicrous. And what makes sense to me is that they can't devalue the dollar, the currencies anymore. Therefore, this is the next. This is the next thing because they don't have a choice. They don't have a choice but to approve a different form of money, even if it is funny money. It's all funny money. That's the thing. It's all funny money. 2024, especially around the election, is going to be insane. Just absolutely insane. Now, some people say, hey, it's too damn volatile. Well, that's actually a very good thing. Probably the best thing, because it does give you a chance to jump in and play the casino when it's low. Of course, it's all about the timing, right? Anyways, Rekt Capital put up a really nice chart on X. They basically highlight some of the rallying before the halving, which points to buy the hype and sell the news. Therefore, there's going to be a price dip because those who bought low, they want to take some profits. Therefore, this is the 21st century casino by far. Okay, let's take a quick look at some of these charts, maybe a little bit more in detail, because of course, the patterns tend to repeat themselves, especially given that the 4-year bull runs. Let's take a look at a couple of these charts, of course, to look at some patterns. Rekt Capital has a nice breakdown of some of the bargain buying opportunities, as they say. Anyways, it has to do with the halving. It's not just Rekt Capital, and some of these patterns can be found across the board, especially with the Fibonacci analysis. So here, this is the Elliott curves, but in this chart, we can see the predicted drop coming in April, and that certainly has to do with the halving. A halving retrace, essentially the price going back down, which is exactly what we've seen recently, went as low as 61K. So Rekt Capital pointed out the exact same thing happened in 2016. Patterns everywhere. And that's what this is about. They even point to a downside wick, sort of a flash downside, which during this halving and pre-halving retracing, they estimate that low range will be around 60,600. Other estimates have it at 58,000 or 59,000, also using the Fibonacci analysis, which seems to be pretty spot on. It's just patterns. But of course, anything can happen and anything can affect this stuff. So proceed with caution. So this little chart is interesting because a hypothetical insane price increase going from the bottom of November of 2022, which was roughly $16,000, if Bitcoin were to shoot up to $1 million, well, it would actually not match its parabolic rise that happened before in previous bull cycles. It always crashes, and that's part of the game. That is totally part of the game. It's of course done to scare people for those that need the money, and of course it's also done as a wealth transfer. It transfers that wealth from those that sold, so it's a pretty interesting built-in mechanism, this whole halving concept, and the bull runs every 4 years. It's all a game if you're willing to play. Just don't bet the whole farm in case something happens. So I certainly thought that at some point, all this stuff would be maybe made illegal because, of course, it competes with the dollar. But now that the big boys, the big banks, have totally given it the green light, there's no denying that this stuff is here to stay. It's here to stay for years to come. How long is it going to last? Are there a bunch of scammers everywhere, like Scam Sam? Absolutely. But that's the thing. You absolutely can't trust anything or anyone Well, for now, I have to take advantage of it because inflation is through the roof. There's no way with all the crazy stuff happening that more money printing is not going to happen, because it totally is. Honestly, I don't think it matters who's going to win this election because both sides are going to print like hell. So in the next video, or the one after, I'll go over some price prediction models because they're just insane. Absolute insanity. All right, guys. Well, that's it for this one. Thanks for joining. Please don't forget to smash the like, subscribe if you haven't. I'll see you in the next one.
Can anybody out there